What are creative ways to finance your business? Welcome to Tea at Taxevity, where you get insights from insiders who make life better, our many clients and friends. My name is Pramod Sharma, and I'm the actuary at the Taxevity Insurance Advisory. And when I'm not doing interviews, I'm helping people transfer risks with insurance. Our guest today is Mark Borkowski. Welcome, Mark.
Thank you, Pramod. Nice to meet you.
Thanks for joining us. Now, Mark, who are you and what do you do when you're not being interviewed?
I've been doing mergers and acquisitions for the past 31 years, selling mid-market Canadian companies to strategic, private equity firms, and high net worth individuals. So the core business is mergers and acquisitions.
Today we're talking about creative ways to get financing for a business. What's the first place to start?
Number one place to start, and hopefully last place to go, is the bank, the traditional banks. We are in a position right now where interest rates are lower than they ever have been in our generation. We've never seen interest rates at this level. So if you have the ability and the capability, you go to a traditional bank.
Okay. And are there situations in which a bank would say no?
A bank will say no when they have examined and studied your personal covenants. Banks are not investors. Banks are lenders. So banks lend. So they need some security in which to provide themselves. And that security is usually in the form of a covenant.
Okay, well, and what do you mean by a covenant?
A covenant would be a charge on a real estate property. It would be a charge on capital that you would leave in the bank in a trust fund or at their discretion. So it would be some hard, cold security that they would be lending against.
Okay, and will banks make exceptions?
Rarely. Banks will make exceptions for large corporations that have a large number of assets and that politically may be hiring quite a number of people. But for individuals, for the most part, there are a few exceptions.
If one bank says no, is there a good chance that another bank would say yes? Or do they tend to look at things the same way?
They look at things almost identically the same. So if one bank has said no, shopping banks, after you've been turned down, you might be very disappointed that it's not going to be a very productive experience.
Okay, can you give us an example of where a bank was a good source of financing?
I'll give you an example that I think everybody can maybe relate to. When Mr. Doug Ford, the father of the Ford brothers, was still alive, he found himself in a position where his company was in some difficulty. And we tend to be brought into situations where companies need to sell, and that would probably be about 60% of all companies. And that's in the mindset of the entrepreneur or the business owner or the corporation, is to say, it's time to sell, we're in trouble. But that's not necessarily the case. So we sat together and he said, what are the options? I said, you can sell the business and give it away. You can merge with one of your many competitors, and that will change the dynamics of the business and the dynamics of the employee structure. Or you can reach a little deeper into your pocket and give them a better covenant.
Okay.
And he said, well, like what? I said, you have additional savings, you have a cottage, you have additional equity that you've built up over the last number of years in your house, why not give them, the bank, that additional covenant?
Okay.
And he did. And the bank lent him more money.
And what did that business do?
It's a company called Deco Decal. It's in the specialty decal business. Mr. Ford passed away shortly thereafter, but his son Doug stepped in, and he took the business from being a business under $10 million in revenue to probably well over $100 million in revenue in a few short years. And they have not had a bank issue since, because they're funding their business out of profit.
That's an excellent example. Banks are not always the solution, and then sometimes there's a need to be more creative and go outside them. Where are places that people could go for money if a bank says no?
Well, there's the next major new development in financing, and it's called factoring or invoice discounting.
Okay, and how does that work?
Well, it works in the fashion that a factorer will, because most companies are experiencing very slow payments on the receivables.
So can you give us an example?
So an example would be a manufacturer of metal products. And that manufacturer may produce a sub-assembly out of metal for a customer, and that customer may take 90 days to pay for that.
Okay.
Because they are assembling a large system. Well, the manufacturer who bought all the steel, put all the labor in, he can't wait for the 90 or 120 days that are being presented to him. So he will sell that receivable to a factoring agent or a factoring company, and they will charge him a very high rate of interest. And that interest on average, whereas we have bank interest at 4%, they will charge him between 12 and 16%.
Oh, it's really that high?
It's very high.
Okay.
However, he will have gotten his money. He will have continued in business. He will have continued moving forward, as opposed to not moving forward and sitting waiting for a check to arrive. So the factorer takes the risk of that receivable. They buy the receivable. So the receivable, when it does arrive, is directed to their office.
Okay, so I just want to make sure I understand this. So the manufacturing company is creating something, but the factorer is not looking so much at that company. They're looking at the company that's going to pay for those parts?
That's correct.
Okay.
So they'll do a credit check on the company that's going to be providing payment. And if that company that's going to be providing payment doesn't have a good credit history, they will not buy that receivable.
Okay, yes, it seems that everyone wants money, but no one wants risk.
Correct.
Are there particular industries that tend to rely on factoring?
Absolutely. The two largest industries in the factoring industry at the moment are, number one, the transportation industry across North America.
Okay.
So anybody in the trucking industry will be a candidate for factoring. And probably the second largest will be the temporary employment agency industry.
Okay, I can understand the transportation industry because they're shipping things, they get paid later, but the temporary employment agency?
Well, the temporary employment agency, I have supplied you like a payroll service, 100 employees.
Okay.
And they're on deck right now working. They will be paid every 2 weeks.
Right.
My client may take 5 weeks to pay me, and I've paid a payroll and now have a second payroll due. So I will sell my receivable to a factoring agent.
Okay.
To keep that moving. Unfortunately, with the cost of factoring and the very tight margins in the recruitment agency, it becomes very, very expensive. And sometimes you wonder why they remain in business. For the record, there is a bank who is the largest factoring bank in Canada, and they are the National Bank.
Really?
They are, without question, they probably do 70% of all major factoring transactions will flow through the National Bank.
That's very interesting. I wouldn't have expected one bank to have such a monopoly.
They have done very well by monopolizing the market. The other banks used to be in the factoring business going back about 7 or 8 years ago, and many of the bank presidents felt that there was sort of something nefarious about being in factoring because of the high interest rates. It was almost usurious.
But
So
wait
they
a
all
second.
backed out.
They have credit cards, so they don't seem to mind high interest rates there.
They don't mind credit cards, but they do mind factoring.
Is factoring big business in Canada?
It's a huge number. It's, let's just simply say, over $600 billion this year. Over $600 billion.
My goodness, I never would have expected that scale.
It's massive.
Okay.
And it's factoring companies are sprouting up every day in different environments. And there's a lot of private factoring groups of individuals that are just carrying a book of business by buying receivables from different entrepreneurs.
Well, it seems that there's a lot of competition. Shouldn't that drive down the rates?
There's also a great deal of demand at the moment.
Okay.
So we've not met that. We've not met that plateau just yet.
Are there other options besides factoring that people should look at?
People should look at the aggressive lenders who will overlook certain covenants, and they are American lenders.
Okay.
And all of these American lenders, surprisingly, have offices in Canada, especially in Toronto. If nothing else, correspondent offices. I mean, Wells Fargo is a very large institution here, and they will lend where the other banks will not lend under different circumstances and different formulas.
Okay. What do they charge relative to, say, factoring or the banks? Are they somewhere in between?
They're somewhere in between. And so they would be higher than the traditional bank, but lower than a factorer. They are also, by the way, pursuing aggressively in being the bank of all the factorers in Canada.
Okay.
They've made that a pledge that they are going to go out and finance factoring groups.
If a company goes to a non-traditional source of financing, then does their bank get upset or does the government get upset?
Not at all. Matter of fact, many are very, very pleased to see that there is a solution as opposed to a dissolution and an insolvency. So these companies are alive. You might call them the walking dead for the most part, because
Okay.
they give up most of their margin. Many of these companies work on very tight margins, and but they're still operating, and they're still employing people, and people still pay their mortgages and pay for their groceries.
That's a great point you raised about the high interest rates that they're paying. What ends up typically happening to these companies? Because here we're talking about short-term debt. They may have long-term debt or other obligations too.
It becomes a vicious circle. They're paying high interest rates. They have other obligations like long-term debt. Mm-hmm. They may have trucks. They may have other assets that they have funded. And at some point, they really hit a wall because they can't manage and balance all the different levels of debt simultaneously.
When is it time to go back to the bank?
Anytime, all the time. The banks all of the major banks will give you a session and review your numbers and review your circumstance and give you good advice. The banks are highly incented at this time to take on new business. And they will give you advice and counsel on what you should do.
You're in the world of mergers and acquisitions. Where do you fit into this whole process?
Well, it generally starts with somebody yelling for help. And the yelling for help is a shortage of capital. And that usually means they look to a company sale as the first option. We will sit with them and say, you're not ready to sell because you don't have much to sell. Let's work through all of these other options that will allow you to get some financing.
Okay.
And once you are stable at some point, we can go back to those other options of looking at a sale. It might be a year down the road, might be two, but it's a long-term relationship.
Okay. It's great that you can help companies in those kinds of situations.
It's part of our business, and it's part of being a good corporate citizen.
You've written an article with additional ways to get financing, and we'll include a link to that at the bottom of this interview.
Yes, it's called When the Bank Says No. There's quite a number of options that you can pursue that most people have not thought of and don't know.
Yes, because when I looked at the article, which is very well written, I saw about 10 options there. It was quite impressive.
And many of these options are not thought of.
I certainly hadn't thought of them, and I'm in the insurance business, which isn't quite the same as yours, but it is a financial business, and the one that I had not thought of was the U.S. option.
The U.S. option is a very good option. There is so much capital in the U.S. looking for a home that they've come to Canada, and they're prepared to make accommodations that the Canadian banks aren't. So it's a very competitive environment. So anybody that makes any kind of step forward towards the banks and listening to what they need will find financing eventually.
And that's a good message.
It's a good message.
Is there a key message that you would like to leave with our viewers today?
The message I would like to leave is that in any banking agreement and where people fall into trouble, there are a couple, at least a dozen or more covenants, which are the rules of the game. When you breach that covenant, it's like a marital infidelity.
Oh, it's that serious?
It's serious.
Okay.
So when you breach a covenant, it's cause for a meeting, cause for the potential of you losing your bank facility.
Okay. Now, if a company maintains all of their covenants, then can a bank simply say, we don't want to lend to you anymore, or are you fairly well protected?
You are well protected. It's very, very rare that a bank would say, we don't want your business unless you've been unethical or conducted your affairs in some peculiar fashion. There's no industry that they don't want to lend to. But they will pull the plug or certainly attempt to pull the plug if you've breached covenants. And the covenants are part of any banking agreement. So we don't have a banking agreement here today, but if we were to go through them, you would see that they're pretty simple, standard agreements. And if you breach them, be prepared for the wrath of the banks.
Okay. It sounds like they're being fair. They're not asking for your firstborn or
No,
secondborn.
no, nothing of that, nothing
Okay.
of that nature.
What's the best way for people to reach you?
I am Mercantile Mergers and Acquisitions Corporation. I've been in the business for 31 years, so you can reach me at through my website or through my email address, mark@mercantile, M-A, for mergers and acquisitions.com.
Okay, and we'll put that information on the screen and
Thank
below
you.
this interview. Thanks for dropping by, Mark.
Thank you very much for having me. Thank you.
Thanks for joining us for Tea at Taxevity. The Taxevity Insurance Advisory helps you understand insurance and bridges gaps in your coverage. There's no premium for peace of mind. How healthy is your insurance?